Good morning or good afternoon. Thank you for attending our Ask the Expert call. Today's topic is 2019 New Economic Laws and Sales Tax Compliance, Part 1. Our speaker today is John Perry, Director of NetSuite Sales at Avalara. My name is Angela Tice, and I'm the Regional Director and National Membership Chair of the CFO Leadership Council. I just want to do a little bit of housekeeping before we actually get started. You might have noticed your lines are muted, and that's just so that there's no distraction while our speaker is talking. However, we do absolutely encourage your questions and comments, so please feel free to use the questions area to communicate. We absolutely welcome your interaction, and we want to make sure that your needs are addressed. Now, this one's a little bit different than what we normally do. At this time, I will not be interrupting our speaker to take your questions as you're asking them. We will address all of the questions and comments in the second part of this presentation, which is going to happen this Thursday, September 26th, same time. And at that time, we're going to spend all the time answering your questions. So if you have not signed up for part 2, there is still time to do so. Definitely do that. And on your screen, you can see that there are other upcoming events as well, but definitely sign up for the second part of this where all of your answers, or I should say all of your questions will be answered. If you're a member of the CFOLC, I just want to remind you too, you will receive 1 CPE for today's webcast. Now, in order to receive CPE, you must be a member and answer 3 of the 4 polling questions. So I will interrupt the presentation in order to bring those to you. If you're wondering how to become a member of the CFOLC, you can get in touch with me after the webcast. We have 2 levels of involvement. And the good news is, if you join today, you qualify for CPE today. There will be a survey that follows the presentation. NASBA, who certifies us, does require that we send a follow-up survey to you immediately following the presentation. So please do give us your feedback because it really does help us ensure that we're delivering the right information to you. So that's really it for the housekeeping. And now at this time, I would like to introduce John Perry. As I said, he's the Director of NetSuite Sales for Avalara, the leading provider of cloud-based software for sales and use tax compliance automation. He joined Avalara in 2008 as the Director of Enterprise Sales and has since held several management positions within the company. John began his technology career working for Sun Data, a principal provider of IBM AS400 hardware, software, and consulting services in 1993. He's worked for premier software and business process outsourcing firms, including ACS Inc., now a Xerox company, and Hewlett-Packard in his 26-year technology career. And John, I just want to say thank you so much for joining us today and sharing your expertise with our members and our audience. And with that, I'm going to hand it over to you.
Well, thank you so much, Angela, and thank you so much to the CFO Leadership Council for this opportunity. I know there are a lot of questions about the recent tax changes and the landscape, and hopefully we will provide some information. No doubt will spur new questions, but the goal here today, I'm going to take you through some of the notable changes that we saw in 2019, how economic Nexus impacts businesses, kind of a preview of pre and post Wayfair, the decision, the groundbreaking decision of the Supreme Court of last June. We'll talk a little bit about the filing and remittance process and how it has indeed gotten more complicated. And we'll offer some ways on how you might be able to manage compliance more efficiently and effectively. There is Q&A here, but as Angela mentioned, we're going to have all of the questions that you might have throughout this presentation captured, and then we're going to have a separate session the day after tomorrow. There will be other alternatives and no doubt recorded and or written responses if you're unable to attend.
Great. So, and John, I'm sorry, I'm going to interrupt because I figured before you get into everything, we have our first polling question. I think it's probably a good one to ask because you're going to hit on it. So do you mind if I launch our first polling question?
By all means.
Awesome. Thanks so much. So here you go, audience. The question is, are you confused whether you have Nexus? And you just select one, whether it's yes, no, or not sure, please do that. And when we're doing the polling questions, if you can answer pretty quickly, that would be great. This way we can get back to John and his presentation. So I'm going to collect those in just a short couple of more seconds as I watch the answers come through. So again, audience, thank you for answering quickly. Appreciate that. One more or two more seconds and we'll collect them and I'll give that information to you, John, as well as the rest of the audience.
Well, it certainly wouldn't surprise me if folks responded with, I have no idea, because the world has changed so quickly. And what compels a business, even before Wayfair, it was still complicated and there were still nuances. In fact, several states had already passed their own economic nexus. But, no doubt folks are confused.
Yeah.
And, that's really one of the most fundamental elements is where do I have an obligation?
Yep.
And
And so
everything else follows from there.
Yep, and you're absolutely right. So 54% said yes, I am confused. 38% said no, and 8% said not sure. So I put those in the confused bucket as well.
Yeah, yeah. Well, they're not alone. Just say most folks today are confused to some degree, and it's also ever changing. So you may feel that you've got your arms around this, but you can be assured that, next month, next week, who knows? So by the numbers, what happened from June 21st of last year to today is we've seen 21 states adopt, actually the velocity with which states have adopted these laws is right. It's kind of unbelievable in and of itself. Today we have about 43. Now, mind you, there are only 46 states that have sales tax. So nearly every state in the union will have or has plans to have something in place by the end of this year. So we've gone from a situation where physical presence was really the key. And not only is it an economic threshold, there are changes in the way that marketplaces are obligated. Some of these marketplace facilitator laws are beneficial to the folks on this call because it puts the burden on the marketplace, that being Amazon, Etsy, Walmart, and in certain states, they have the obligation to not only charge the tax, but also to remit the burden of the tax. In the past, there have been situations where the marketplace calculated, but the onus was still on the business, the seller, to file and remit. And as you'll see in a slide or two, that alone is completely complicated when you add multiple states. So there are laws around marketplace facilitator laws that one needs to be aware of. There are situations around economic laws that we need to address. So what are the impacts of these economic nexus laws? So pre-2018 or pre-Wayfair, the obligation was to a company, if they had a physical presence, something tangible that connected them to a state, an office, a warehouse, remote employees. Now, mind you, there were still nuances to even that. For example, Amazon has a program called FBA, or Fulfillment by Amazon. And one of my discovery questions would be, are you using FBA? And when the customer I'm talking to answered in the affirmative, I would say, well, you should talk to your tax professional, because simply by using Amazon for fulfillment, you may be connected to all the states that Amazon has a warehouse. And this knocked some folks completely off their heels because they had no idea. They were sure they were in one state, and they come to find out in a heartbeat that they're actually in 16. So that alone happened even before these economic nexus laws. So it was, though, simpler. One could know with some certitude where they might physically be connected to a state. But in June of last year, all of that changed. So what was the law that was upended? It was called the Quill Act, and that was enacted in 1992. If you think about that date, certainly there was some economic, e-commerce transactions happening in 92, but it certainly wasn't the tens of billions of dollars that we see today. So the decision upended the Quill Act, which was the legislation in place that The basics was that you had a physical presence, and 1967 was Bella Hess. So two older legislations that had, really kind of commanded that businesses be compelled to charge sales and use tax if they had physical presence or unended, or upended, I should say. And now every state has or will have some kind of economic nexus law. So what is economic nexus? It's a tax collection obligation that is now based on a level of business or transactions that the seller is doing in the state. In essence, your customers are now determining where you have an obligation to register, to collect, report, and remit sales and use tax. So unlike physical presence, it's based entirely on a sales threshold or a transaction threshold. But like almost everything to do with sales and use tax compliance, every state has their own little nuance to it. So you could have some transactions, a single transaction of any size in Kansas compels one to collect and remit in Kansas. In other states, the thresholds can be 500,000. In some states, it's a number of transactions along with a threshold. If you go to Avalara's website, there are just volumes of information that can kind of shore up many of the questions that you might have. And as a follow-up, we can send you some of the ways to navigate to those pages. But basically, at the end of the day, where you sell is now going to be much more important than your physical presence. So when I think of state government, my first thought isn't always around a well-oiled bill-passing legislative machine. But I guess as it relates to economic nexus, states have shown that they actually can be effective, although perhaps not in your best interest as it might be. This shows a slide of October of 2017. As I mentioned previously, some states had flouted the Quill Act and passed their own economic nexus laws. But today, we have almost every state. Now, mind you, there are still a handful of states that don't charge sales tax at all. So we have a couple of holdouts in Missouri and Florida, but almost all of the country at this point have already passed some form of an economic nexus law. And Angela, would you like to add that second polling question now, perhaps?
Sure, that's perfect timing, thank you. So I'm gonna launch the second one. And this question is, how many US states are you currently doing business in? 0, 1 to 10, 11 to 20, or 20 plus? And again, audience, if you can answer quickly and then we can collect those responses, I'll share them back with John. And with all of you, actually. Get a couple more seconds in there. Okay. Here we go, and I'm going to give this back out to all of you so that you can see it. So it looks like 5% says 0, 35% said 1 to 10, 25% 11 to 20, and 35% 20 plus. Interesting.
Wow, and it's a perfect segue as we talk about the remittance process. Now, this isn't the calculation, and there are plenty of complications around calculating in the first place. This is the process of going from one state to many when you have to file. So in the filing and remittance process for a single state, company has to determine what are the tax rates where I'm selling. What is the filing schedule? Is it monthly, quarterly? Some states like California, you might be a quarterly filer, but they want you to file monthly. 90% of the due tax on the quarterly filing and accruing the balance to that quarterly filing. So you have these kind of lighter monthly remittances that you're going to have to file, and then you have a longer form quarterly, even if you're a quarterly filer. So you have to collect tax on all the applicable purchases where tax is appropriate. Now, there are complications around taxability. There are complications around exempt entities or customers or resellers. You might not charge sales tax to those types of customers in those transactions, but you would be compelled to collect something called an exemption or a resale certificate to exclude you from the obligation. And in most situations, states deem everything taxable unless you can prove otherwise, and therein lies that complication. And then you complete the remittance form, submit it with the payment on or before the due date. Otherwise, you might be open to penalties and interest for a late filing. Now, calculating in one state is hard enough. You have about 152 mailing addresses. You've got 12,000 plus jurisdictional boundaries, which, by the way, don't align to zip codes, which are usually the tool that most folks have to do if they don't have some kind of a tax decision engine. There are tens of thousands of sales, use, rental tax rates and rules. There are many fuel tax scenarios for those types of industries, millions of product type exemptions. So in some parts of the country, SaaS or cloud-based computing is not taxable or reportable. In California, where I am, you don't even have to register if you're selling exclusively in California. However, there are about 15 to 20 states where it is taxable, and you have states like Texas where it's taxable, but at 80%. And then you have home rule states like Colorado, where local jurisdictions can set rules that actually contradict the state. So cloud-based computing is not taxable in the state of Colorado, but it is taxable in Denver. I'll let that sink in. And, again, taxability rules, like most things, are determined at the state or the local level. So you have to look at, what do I sell? How do I sell it? Where do I sell it? What are the taxability rules that are germane to that state? New York, if a men's shirt is $120 or less, it's no tax applied. Add a penny or more, fully taxable in all boroughs. Here's a tip: if you go into deli in New York and you have a bagel and they slice it for you, it's taxable. If they give it to you whole, it isn't. And my favorite on this slide is the donuts in Texas, where fewer than 5 are taxable, but more than 6 are exempt. Again, as a seller, how can you stay up to date on these myriad rules and the changes that happen frequently? Once you think you've got your arms around the taxability content, you can be sure that in a month or two, somebody changes that rule. And therein lies one of the great complications. Now, if you sell tangible property alone, that can be simpler, but there are states like Texas that apply sales tax to the freight. And there are, these are the things that sometimes there are single article tax in Tennessee and Florida. So if a single item on an invoice in Tennessee is $1,600 or more, there are additional state taxes that are applied up to $1,600. So I think what you're hearing is that you can't just simply assign a rate and expect that you're going to be doing this well or correctly. On the filing remittance process, once you go from one to multiple states, now you have to determine all the states and the local jurisdictions where you've triggered Nexus. So where do you have an obligation? Identify the state and or the local's rates that are germane to where you're selling, and the due dates and the filing schedules that can differ. Even within a home rule state, you might, in Alabama, be a monthly filer with the state and a quarterly filer with one of the cities. I know, I'm not making this up. So you must collect the proper amount on each taxable transaction, make sure it's submitted on time and accurately. And this, of course, presents all kinds of complications around check runs. A lot of studies have suggested it costs anywhere between $8 and $25 to cut the check. This has nothing to do with the amount on the check. It's just all the approvals that have to happen. And think of the burden on your controllers, on your VPs of accounting or finance, on the CFOs themselves, who usually have to have their hand in the treasury to make sure that there's nothing untoward happening. So obviously, as you add additional states, the complications increase. You have to track the due dates. You have to track when you have and where you have local filing requirements. Notices are something that are often overlooked. I spoke with a controller a couple of weeks ago. He had an intern who kept shoving the notices in a desk drawer. So nobody knew that they were getting notices questioning one of their returns. The state of Texas pulled their business license until they were resolved. Adjusting to the filing methods, states change their forms, they change their methodologies. In my time at Avalara, over 11 years, we've seen states go from paper to electronic filings, which are simpler in some ways, but they add complications as well, because you still have to manage the treasury and you have to make sure you're filing on time. And most states will accept some kind of an ACH or wire, but there still are locals that require a paper and a check. So again, the complications build upon themselves and upon themselves. So for locals, these are, Colorado, Alabama, Louisiana, there's a handful of states where there are local requirements. So you file to the state and you file to the local county or city that you have triggered Nexus in. So they may have contradictory rules around taxability, as I mentioned, in Colorado, and they may not have the same filing frequencies as you have with the state. So there again, unending. So you must track the due dates and the filing schedules. They're not all due on the same day of the month, and some have prepayment requirements, as I mentioned. There is some good news here too, though. In Texas, if you prepay the filing, you get a wonderful credit. I think it's up to 1.5% on whatever the remittance is. And I was talking to some folks who did an extraordinary amount of business in Texas. They're a California-based business. And I asked the controller if they took advantage of the prepayment credits. And she said, I'd never had time. I saw the button for prepayment, but I never had time to look at it. We did a little back of the napkin and found that they could save $60,000 a year simply by prepaying in Texas. So these are things that under the harried work, you often don't have the time or the ability to look into some of the programs, the credits, the discounts for prepayments and so forth. And you do also have to be mindful of furlough days, tax holidays, state and federal holidays, and jurisdictions that might cross time zones, because you might think that you're filing on time, but you're actually hours or maybe even a half a day late. As I mentioned, the filing methodologies have also transformed and evolved over time. Mostly payments are allowed via online, but you still, some folks are using, a tool, but it presents you with a prepaid or what they used to call a signature ready form. And now that's almost worthless, because you have to take the data from that form and plug it in to the state website's filing. So even when you're trying to do some efficiencies and offer some ways of gaining some time into your day, it can kind of backfire, because some of the older ways of managing compliance through technology have not kept up with the times. And I think we've made this point. So even the payment methods, mostly electronic check or ACH, is acceptable, but these automated withdrawals can cause concerns as well. Again, it's about timing and making sure that it clears your bank and into the state on time, so you're not, making yourself available for penalties and interest. And as I've already touched on, notice management, this can be overlooked. There are many notices that a state might send out. They can send out something to tell you that the rates are changing or the rules are changing, and those are informational notices. More important are the notices about some question about what you filed, and those are the ones that you have to act upon, and they can get lost in the mix, unless your staff are highly trained and they understand what are these notices about, and is this one that's just informational, or is it one that is compelling me to act? And that's certainly something to be mindful of. As I mentioned, if you can ignore them at your peril. And Angela, that might be a good time. I think we have a third polling question.
Great, actually, that's a perfect time. So I will launch that right now. So the question here is, have you heard of South Dakota versus Wayfair Inc. or Economic Nexus before today? So people are giving their answers. Thank you again, audience, for putting those answers in right away. And I'll just leave it open for a couple seconds more so that we can feed that back to everyone so that everyone can see what the consensus is.
And I'll give everyone a break because I have to tell you, I've done these presentations over the last year and a half, and I present to roomfuls of CPAs. So these are people whose job is to stay up on top of all of this. And I ask them that very polling question, what do you know or have you heard about Wayfair? And out of a room of 50, 3 or 4 hands sometimes are raised. So
Wow.
even the professionals are unaware of some of the elements there. It's, of course, it's becoming more well known, but you know, again, it's not. Don't feel bad if you hadn't heard.
Yeah. Well, I guess they've heard because it's 86% did say yes,
Okay.
heard South Dakota versus Wayfair. 13% said no, and 2% said not sure. But that doesn't
Yeah.
mean that they know anything about it, John.
Well, again, it certainly impacts, you know, your jobs as, you know, the gatekeepers of finance, all of the burden. Oftentimes the CFO is the one who's signing the form. And so the obligation under perjury and under the law is that I'm filing accurately and I'm filing on time. And oftentimes it's the CFO who's the one who's, you know, got the burden that keeps them up at night. Am I doing it correctly? So it doesn't surprise me that this group would be up on top of it, but at the same time, it doesn't make this challenge any less acute. So there are some best practices around managing these complications. First and foremost, know where you have an obligation. You know, go to your tax professional. Avalara actually has a tax advisory services division whereby we can do a Nexus analysis at this, you know, a quick overview, give you an idea of where you have triggered Nexus today and how you can remedy that. Keep on top of product and service taxability changes. As I mentioned, these are happening all the time. There's never a point where you are, I've got it, it's done, because you can be sure that there's a new rate, a new rule, a new boundary change coming down the line. There are tools available to you. Obviously, rate tables are and have been traditionally the way that a business gets a rate. The problem is that zip codes are a blunt instrument. In some parts of the country, they're fine. Michigan, Indiana, the whole state is a single rate. So these boundaries don't impact you. But in most of the country, zip code is not going to define the proper tax in where you're selling. So in Colorado, for example, in one zip code, there can be 7 different sales tax rates that vary from 3.5% to 8.5%. And if you're consistently selling under what you're due under audit, this is going to come back to bite you. And Angela and I were talking offline, and you know, it's true that states have passed these laws, and it's fair to question whether they have the insight or the capacity to go after folks. And I recently saw an article that tax authorities are using crowdsourcing to find non-collecting sellers. So because they don't have the capacity in-house, they're turning to crowdsourcing in order to find scofflaws. You know, sellers are ratting out, or buyers are ratting out sellers to say they didn't charge sales tax on my order, and they get some sort of you know, they get something for calling out those that are not charging sales tax. So, you know, it's a fair assessment to think that the states are not prepared to do this and go after you, and I would agree. But I think that's the next phase, is now they're going to build an infrastructure. They do work, you know, together state by state. You know, one audit happens, he calls up his friend in another state, says, hey, I'm under audit, these folks are out of compliance, and you get like this domino effect. I talked to some prospect a few weeks ago, and they had been audited 24 times in 3 years, and kind of counterintuitively told us that the faster they got information that was requested, the less deep the auditor went into prior periods. So be audit ready and streamline your process wherever possible. And there are technologies available to you. Now, any billing system has some basic capacity to charge sales tax. So a point of sale system can charge sales tax. Of course, in a point of sale system, specifically what the rate is in your brick and mortar store. The problem arises in POS when you do a send sale. So in Chicago and New York, a lot of folks don't want to take their purchases on the subway with them. So they'll say, hey, just send it home. And now we have to do a send sale and determine what the sales tax is, where the product is going to be sent rather than where it's being purchased. So POS, e-commerce platforms, ERP systems all have a capacity, but they do, usually can only accept some kind of rate table. Now you have a problem that your shopping cart might have a different rate table than is being used by the ERP or the POS system. So if they buy it online and then they try and return it, they're not going to have the sales tax consistent. And this is why it's nice to have a single point of truth when you're looking at all transactions from any billing platform that you might have. And today, it's omni-channel. I talk to folks and they go, yep, I quote out of Salesforce. I have Zuora for my subscription billing. I have Magento for my e-commerce cart. I have Amazon and Etsy. And I also have a customer service center where they process orders directly in the ERP. What do I do? And this is the strength of Avalara, is that we have more than 700 connectors, so that irrespective of where those transactions are originating, there's a single point of truth and reporting, all backed up with accuracy that is guaranteed and reduces the risk of audit. So you should look at a way of applying a solution that looks at ways of giving you efficiency. If sometimes I engage folks and they're under the impression that their current process, their manual sales tax compliance process, doesn't cost them anything. And then we get into it and realize 20 or 30 hours a month are being spent by very high level individuals to do what is in effect a pass-through activity. You don't make money doing sales tax well. You're just avoiding risk downstream. And so, if we can provide technology that can make you more efficient, then we can certainly address some of these downstream challenges and let you focus on revenue. So Avalara, this is intended as informational, but I would be remiss if I didn't talk a little bit about what Avalara can do to streamline. I would also add that there is a technique, or there is a solution that might help if all your Nexus worries are around economic Nexus. There is a program. It's been around longer than Avalara. It's been around over 10 years. Actually, Avalara's been around 15. But the point here is it's called Streamlined Sales Tax, or SST. And if you are a Streamlined Sales Tax, if you join the program and you have Avalara as your provider, economic Nexus does not make you a non-volunteer. And if you're volunteering in those states that are triggering economic Nexus, Avalara will file for you, calculate for you for free. We are reimbursed by the state as their certified provider. So we may have a follow-up session, but I'd encourage you to look into Streamlined Sales Tax. The website is www.streamlinesalestax.org. Avalara is one of 5 certified providers, so that one or more of the 24 states that are part of the SST program, now any economic nexus that is compelling you to register in multiple states can be addressed, and Avalara can file for free. So we have a solution that addresses calculation through Avatax. We did something on order of almost 7 billion calculations last year alone during Cyber Week, and we're about to come up to our Super Bowl, which is the day after Thanksgiving. We did 1,800 transactions a second, all of them returned faster than you can blink your eye. So 63 million transactions occurred in one day. We have a solution if you're a distributor or a manufacturer and you don't really have a sales tax problem. I would argue you have a challenge around requesting, collecting, archiving, and managing the life cycle of those exemption or resale certificates. And then lastly, Avalara can file and remit, very much like a payroll service works today. You're able to aggregate all of your transactions from any billing platform. There's a single report that you could go in, make any credits and adjustments, but basically we'll do one pull for however many states you have an obligation to file in, and you are done. From that point, the onus is on Avalara. We will file accurately and on time. If we are late filing, we are on the hook for penalties and interest. Avalara even resolves notices on your behalf and then alerts you to its resolution. At the end of the filing period, we'll affix a copy of the return that we filed and the payments confirmations right in your dashboard. And with that, Angela, is there a final polling question?
Yes, as a matter of fact, there is. So I'll launch that right now. Thanks, John. And this one is, what's the hardest part of managing sales tax for your business? Is it calculating the right tax rate, understanding where I need to register, managing exemption certificates, or remitting returns? So everybody is quickly giving their answers, which is fabulous. And John, I'll let you know too that we are getting some questions, so I look forward to your answers on Thursday the 26th. And then of course, for anyone who is asking a question, if for any reason you cannot make the 26th, we'll make sure to get back to you with the answers, whether it's, someone, whether it's John reaching out to you directly or whatever the case is, we'll make sure that you have those answers. And this is being recorded, as will the one on the 26th. So we will make sure that you get your answers. So if anyone has any other questions and you want to submit them now, please do. And again, you'll have the chance to do that on Thursday as well. I'm going to close this now and share that just really quickly. And so it looks like 31% said that calculating the right tax rate is the hardest part. 41% said understanding where I need to register. 20% managing exemption certificates, and 8% remitting returns.
That's a very interesting cross-section, and all of this can be easily addressed through technology. I'd encourage folks to look at our website. There's just a wealth of information. If you go to our landing page, there's a tab noted as resources. There's information. You can actually do a kind of back of the napkin idea of where you might have Nexus. Of course, a formal study is always encouraged. If you're a partner or a CPA firm, we've worked very closely with you. We want you to be, helping your customers make good decisions. And there's a whole CPA community that we support through this website here. So you can learn more, best practices. And with that, and on behalf of Angela and everybody at the CFO Leadership Council, I really appreciate your time today. I hope it was helpful. I know we probably spurred more questions than you had coming in, but our goal is to help you understand the best way to help your business be efficient and address any compliance issues today and ongoing.
With that, John, I don't know if you'd like to take any questions because we do have time. Totally up to you, or if you'd want to wait until Thursday.
Well, in the interest of everyone who's staying on, I'm happy. I would like a chance to digest and see what kinds of questions are coming. But if you'd like to name off a couple in the next few minutes, I'd be happy to address some.
Sure, and again, if it requires more thought, we can just let everyone know that exactly that you want to kind of think about it a little bit more, and then give the answers on the 26th. Because again, I know I'm putting you on the spot. This wasn't part of this, but I'm
happy to.
I know.
A lot of material.
Great, so I'm going to take the last one first and just go backwards if you don't mind. The first question, or the last question that was asked, is what are the best resources for determining taxes on SaaS or HaaS revenue streams?
Well, again, this gets back to all of the complications around locals and states. Some determine that SaaS is taxable, others have determined it is not taxable. Some have determined it's taxable, but at a reduced rate. And, you can do the legwork and you can go ahead and try and determine what are the rules in my given state. And you probably have to get out a calculator every time you invoice somebody in Texas because it's taxed at 80%. But two challenges. One, I've come across folks who started with on-prem software and they have built it for the cloud, but they did not change the SKU. So first order of business would be to separate out on-prem software from maintenance, from implementation, training, all the different other elements that might be a part of a complete solution that you're selling, so that you can apply. And Avalara has a concept of system tax codes. What we do is during a go live on our service, we look at the product and service items that you sell and provide some guidance about what best practices and other customers had done who sold that type of item. And Avalara has developed system tax codes that are either applied in the ERP or the shopping cart or through our dashboard to apply the right rules. So rather than thinking in terms of the states, you're now thinking in what are the product types, assign an Avalara system tax code. Avalara keeps that code up to date. So if California next month decided to change that SaaS would be taxable, you wouldn't have to do anything. Now, we would alert you to this change as part of the Avalara ecosystem, but that's the best way. There's really no easy way of determining taxability other than going to the state, and anyone who's gone onto a state website knows it's very, very difficult to get that simple answer you seek.
Yeah, I can hear that even in the answer that you've just given. Right? It's not a simple answer. So another one that may be a little bit quicker. The question is, if you determine the company has triggered economic nexus, do you have to file back to the date the state adopted the law or the date you register for sales tax number?
That's a great question. So the state of New York said, you know what, it's from the point that the law was passed. So if you did it in arrears, you would owe back to when the law is passed. There are other states that say from the point that you trigger the nexus. And, again, I'd be remiss if I didn't suggest that one of the nice features of Avalara is that we actually have taken all of the rules for all of the states, the thresholds, and applied that into our dashboard so that as transactions are occurring, we're actually counting them and telling you when you're approaching a nexus threshold or when you've exceeded a nexus threshold. So it's sort of, rather than having you at the end of a month look back and count transactions and then look at the state websites and what are the rules there, we're actually factoring all of this in from any billing platform on your behalf. But it is complicated. And like everything, every state has a little different nuance. So as best I can answer that question, in some states, it's when the point of hitting that economic threshold is met. And from that point forward now, most states have not compelled businesses to go back in time if economic nexus before the law was passed is not relevant. However, one of the complications is in some states, exempt sales count towards your threshold. In other states, they do not. So it's a good idea to understand what the rules are in the state or states that you have and are doing business.
Wow. Okay, one more for you. What timetable do you use to determine if you've met the economic threshold?
Well, again, it's predicated upon what the particular state or local rules are, and they have not gone back before June 21st of last year, but and it's when the legislation passed in that particular state. But that's where things get a little muddy because some states it goes from the point you've triggered nexus and they would start counting it from the point that they passed the law, and others it just differs. So again, I wish I had a clearer answer. It's going to be like this, I think.
Forever, perhaps. And then the last one here, and again, I think you might have to go back to your slide. It was in regards to slide 27. The question is, out of curiosity, how are our members handling number 1, 2, and 5? And then the follow-up to that is, and what does John recommend we do to stay on top of the tax technical know-how?
Yeah, I'm not sure. These aren't, what's slide 24?
No, 7.
Oh,
27.
oh, sorry.
Sorry.
That's okay. All right. Okay, so, and I'm sorry, Angela, could you repeat the question?
Of course. So it was out of curiosity, how are our members handling number 1, 2, and 5? And then what does John recommend we do to stay on top of the tax technical know-how?
Well, number one is obviously the most important because you have to know where you have an obligation first and foremost, and or where I will likely trigger Nexus. I mean, if you haven't yet, or the state just passed the law that you know you do a great deal of business in, obviously you can be assured you're going to hit that threshold. So know what the thresholds are. And, I would recommend either, go to your tax professional, your CPA, whomever you're working with today. Again, Avalara can do this. We don't compete with our partners if they offer these services, but we can do a Nexus analysis for you and give you a quick idea of where you may have an obligation. And then, the right tool for the right rate. Here again, zip codes are the only tool available to you if you're not using some kind of a tax decision engine like Avatax. Avatax actually determines at the latitude longitude. So we have a map, we have about 150 people whose sole task in life is to read legislation, update boundaries, rules, rates, right to the rooftop. And in states like Colorado, you could have a home or business 10 feet away from another home and the rate can be double. And is it likely that you're going to be, audited and burned on missing that? I wouldn't say so, but I think it adds up over time. I was engaged with a customer and they sold items that cost more than $250,000. And when I showed them the map of Colorado and the absurd way that the jurisdictions were drawn, he recognized that if he's missing half the tax on $250,000, that's going to add up pretty quickly. And so I think the last was know and where and how to remit. This kind of comes with Nexus. If you understand where you have an obligation, then you can obviously go to the website, and based on the amount of business you're doing, that would tell you if you're a monthly, quarterly, or annual filer, and find out what the rules are. Again, if you outsource this to Avalara, we would help you understand what your filing frequencies are, and we would take this burden off every month. You would just make one lump sum, fund an ACH account, and that's it. Avalara is then compelled to fill out the forms on your behalf, pay the states on your behalf, and take the burden of any penalties and interest if we're if we're late filing.
Great, thank you, John. And again, I just want to remind everyone that's still on, we're going to save these questions for John so that he can answer them again, just so that, whoever else joins, I'm sure these questions will be ones that others will also have the same question, right? So we'll ask you to just repeat your answers if you don't mind, John, on Thursday. I'm sure you don't. And again, not selling anything here, but boy, it's so complicated, and I can imagine that the best thing to do is to find some company or someone that this is all they're doing all the time. It's amazing. I've had this conversation with a few other people just on the same topic, and it's kind of like it's almost a brand new job that could one person in one company actually handle.
No, that's an excellent point. In my early days at Avalara, I would always inquire whether the folks I was talking to outsourced payroll. And inevitably, from the smallest startup, mom and pop, to the largest Fortune 50 company, everybody, it seems, understands that the tribal knowledge is you outsource payroll, yet they struggle desperately managing compliance.
Mhm.
And I never, I would always use that, in my inquiries, like, well, if you do that, then why wouldn't you think about outsourcing compliance to someone who focuses on this and let you focus on your business?
Right.
The old adage about do, your core competency and outsource everything that's extraneous to somebody else.
Right. Right. Yeah. I mean, it's so much more efficient. So again, it's just so much to know. And like you said, I mean, from your neighbor to you, it could be a difference of, it just amazes me that it could be that close to you and that different.
I know. I'm
This,
always empathetic with the folks I talk to. I do have a job because of it, but it does address a real compelling problem. A recent somebody who signed up with us recently suggested that they would have had to hire 8 employees to
wow.
do what Avalara was going to do for them.
Yeah, I believe it. I believe it. And I would only imagine that the more technologically advanced our world gets, the more of these types of things will come up. So, John, I can't thank you enough for sharing your wealth of information and knowledge with our members and our friends of the CFO Leadership Council. Again, I do want to remind everyone that your questions, other questions, please think of them now that you're kind of absorbing what it is that John shared with you today, and definitely bring those questions with you on Thursday, same time from 1 to 2 Eastern time. And again, that is this Thursday, September 26th. I will look forward to seeing everyone and all of your questions, and John, with you answering it all. So if you do have any questions, our information is up there. You're very welcome to reach out to me or to the VP of Marketing, and is also on this call. And again, can't thank you enough. I'm going to say thank you to everyone for joining us today. I know you received some valuable and practical information from John, and we look forward to the part 2.
All right. Well, thank you, Angela, and thank you, Kristen, and all of the folks at the CFO Leadership Council and those who attended today. Thanks very much.
Great. We'll see you on Thursday. This does end our presentation today. Have a great rest of your day, everyone.